hope my speech goes better than my phone calls today. I hope it goes better than me trying to go down the stairs here, because it seems like it's not my day. And then just now, when I was sitting here, the other part of the mic decided to go underneath the chair. So it looks like it's not my day. So I must just tell you, in that case, it's not your year either. But I'm going to talk a bit about the world economy, then about the... we're getting there. The South African economy. And the South African economy, I'm going to look a bit at the South African government, which I think is our biggest risk at the moment. I'm going to say a few things about the State of the Nation address as we go along. I'm also going to point out that if we get a few things right, we could turn things around, but there are problems. And then I'm going to just talk about some predictions very quickly. If we look at the world economy, and this here is a very great summary, I think, from the IMF. It shows you that the emerging markets are really outperforming the advanced economies by some margin. They're really starting to catch up. The world is getting richer. We've never been this rich in our history as a world. We've never lived this long. You can go in 110 things, but we've never complained this much either. But the point of the matter is, South Africa is outperforming even the advanced economies. And, you know, while we see a slowdown in the next few years, or the IMF does, the next year or so worldwide, I think they still may be a bit optimistic. The South African forecasts here are also still quite optimistic. They're still over 1%. When we'll get to South Africa just now, you'll see most analysts are away from that. So we're not looking very good in South Africa. We've not played catch-up. Remember, the advanced economies are also not growing as quickly in their populations as we are, so we have to grow faster. If you have a look here, this is our per capita income. When we look at the early 90s, we were about 10% richer. Now we're about 20% poorer. This is 2017 data. The 18 data gets released in the next month or so. I think it's going to be about the 4th or 5th of July. But just think about it like this. You know, today, this year, Sri Lanka, the average income in Sri Lanka in per capita terms and purchase power parity overtakes South Africa. How's that? You know, it's sort of not quite comprehensible that we're dropping this quick. We really are going to drop off, not off the charts maybe, but out of the top 100 in the next few years. There'll be a lull of a year or two where there's no countries overtaking us, luckily, because they're further down below. But if you think of Indonesia, Peru, Mongolia, these are not rich places. These are not famous places. These are not places of great growth or anything, but they are outperforming us. And it's amazing. Okay, and then there is Venezuela that is dropping. They might just drop by on the way down. And by about 2021, Bosnia-Herzegovina and Albania will be the last two countries, the poorest two countries in Europe will pass us. So, at current trends, obviously, things could be a bit different. Worldwide, though, I am a bit fearful of a recession. The reason I'm fearful of a recession is this indicator more so than any other. It is really the one indicator in America that's got a very good track record. 7 out of the last 7 recessions have been pronounced by this about 12 months ahead of the time. The yield curve goes inverse, with other words, longer bonds have a lower yield than the shorter term, which is not what you want. And it's only been wrong twice out of the last 11 times, and it is negative. It's certainly exacerbated by other factors. With the Chinese-American trade war is a huge concern, but at the same time, the corporate debt in China is very big. So where China was growing 11, 12%, nobody really that didn't really matter that much. Now they're growing at 6%. Now you're starting to think, wait a minute, you know, their debt burden to GDP is getting quite big, and you need to be a bit careful of that. I'm not saying it's the end of China, but I think we might get a China blow out of some proportion at some stage in the near future. The world trade is certainly slowing down. These are the containers going through 85 harbors around the world, the main container harbors. So it's the quickest indicator that we get. It comes out within 3 weeks of a month end. And there's a clear slowdown there. And I think Brexit might play a role there too. But certainly the Chinese-American, mainly trade wars, are having an impact. I stole this slide from one of the people we did the presentation with before, and he called it "This Time It's Different." Now, you know, those are the most famous words in economic history. This time is different. This time we're really going to fix South Africa. This time, but this is a real difference. The English central bank rates go back to 1694. They've never been this low. We've got 3 central banks here that have got more than 100 years of history, and you can just see Sweden, Japan, and the UK, how low their interest rates are. And the debt burden in the world is very, very high. And that says to you that, you know, people are worried at the central bank level. And one of the reasons why, if you are in cash, you want to keep a bit of cash in South Africa is because we still have a central bank that has real interest rates. Around the world, it's virtually just the emerging market central banks that have that. All over the central banks in the developed world where inflation is low, they've allowed their interest rates to go really low. And as you can see here, just as an example, Sweden, you put money in the bank and you get out less. So I think it makes sense to keep a bit of money under the mattress in that case. You don't have to pay the bank manager. This is updated a bit. The South African rand has come back in the last few weeks, but just since the start of 2018, it's still one of the bottom 4 performing emerging market currencies on the one hand. On the other hand, most emerging market currencies have dropped against the dollar. That's just the way it's been going in the last, especially since the end of the commodity boom in 2011. The commodity producers, that would be South Africa, Chile, Brazil, Russia, even Poland, saw quite a lot of shift in their currency. Argentina is also obviously more an agricultural commodity producer, but Argentina and Turkey have political problems as well. And there's now a thing where they call the next Fragile Five. If you remember, the Fragile Five was India, Indonesia, and so on, and Turkey. It's now Turkey, Argentina, South Africa, Brazil are part of the Fragile Five. So we remain in the Fragile Five. On the government side, I cannot fathom, you know, we've got a huge problem. Eskom ain't working. We're starting to get it to work maybe, but it needs a lot of money. It's not going to be solved overnight. And here we deliver a speech about bullet trains and cities, and we're going to fix our education, get people to read, which is a good thing. But, you know, if you look at what's happening with government finances, I would have thought, as a president, I would have said, I'm taking responsibility. We need somebody to step up. This is a country without people taking responsibility. Nobody's responsible. If the truck burns, nobody's responsible. If somebody burns down the town hall, nobody's responsible. So I think we should just shoot the president and then nobody's responsible. You know, and but if you look at this, the government expenditure, the red line outside of interest, is not going anywhere, and these are Treasury forecasts. The blue line above that includes the interest, and that's going to become more and more and more. And if you compare us to the big emerging markets, which includes us and the emerging markets, you can see, on average, we have grown our government expenditure far more than any other emerging market as a percentage to GDP. This is not going to solve our problems. You cannot spend your way out of misery. You cannot borrow your way out of misery, and you certainly cannot spend your way out of trouble if you are inefficient. And you can build the best power station in the world, okay? Or just build a power station that works in South Africa. But I mean, build the best power station in the world, but the distribution network doesn't work, it doesn't mean anything. So we're all saying, yeah, we're going to have the best civil servants and a caring state and a developmental state. Hey, if the guy gets to work. Here's a wage bill. The wage bill in South Africa is 14% of GDP. It is quite simply the third highest wage bill as a percentage of GDP in the world. It shouldn't be. And if I take all our taxes, our personal income tax, only personal income tax, but that's the biggest tax, that's 38%, released yesterday again by Stats SA, who've gone through the figures and cleaned it up. 38% of total taxes collected is personal income tax. That does not cover our wage bill. Makes you think. Our central government balances here, this is still positive at the moment. I mean negative, yes, in the sense it's minus 4% of GDP, but that's still a strong number, because the number's going to come in this year is going to be bad, because we've just announced in the summer that we're going to pump in extra money, forward the money to Eskom. We're not going to get the revenue. The revenue growth isn't there. All right? So what's going to happen? Our debt to GDP, or not, is going to grow, but the deficit, the one thing that the agencies are going to watch, is going to increase, not to 4.5%, like we said. It's going to be 5.5%, 6.5%. When we give that detail out, that is not going to be positive news for the Rand. That's not going to be positive news for a Moody's. I cannot see that. And how many times have we broken this promise? We said we'll bring it back under 3% deficit. How many times? Under Pravin, under Nene, Gigaba, Momboweni. How many ministers are going to break their promises? Our debt to GDP. The government debt to GDP as a percentage of, or government debt as a percentage of GDP has never been this high. Never. For South Africa's history. If you add all the state-owned enterprises, then you could say it's been that high in the mid-80s, but then we remember the trouble we were in. Remember the mid-80s where we had financial sanctions against us. We had to borrow money on 24-hour basis, and Transnet was the major go-to person in the world, or somebody in Nedbank, because they were doing Transnet's account for the Swiss American dollar benchmark. Do you know that? And ultimately, we nearly went bust. It was literally, we had two guys from Treasury sitting in Switzerland phoning by the day to get the money in. Now then it was the Morgan Stanleys, the Bank of America, and Citibank, it all pulled out. This time it's the rating agencies that will bring that about, because when that big chunk of money from the index funds has to go, it's going to be a rather large hole to fill. And it is concerning that this was not part of the state of the nation, because this is our state of the nation. We mentioned unemployment, we mentioned the economy, but this part of the economy we didn't want to mention. And that is a concern, because if you look at South Africa right now, this is what the rating agencies are looking at. This is 50% of your mark, if you wish. As you look, the figures are slightly different because I'm using two different databases here. This comes from the Bank of International Settlements. So when they look at emerging markets, it's quite a broad church. You can see there, they've also gone up slightly, but they're at 48%. We're at 59%. Debt to GDP as a government, and that's only the government. So there you have it. And we've already got high tax rates, by the way. We've got the 10th highest personal income tax burden to GDP in the world. We've got the 5th highest for corporates. We're number 45 or something on VAT. There's no other places we can really push this stuff up. If you look at the total debt, it is a government problem. Households, don't care what the people tell you, the fact of the matter is households have brought down their debt. Might be a different thing, it might be more short-term and more micro-lending and at a higher interest rate, that's true. But ultimately, households have brought theirs down. Non-financial corporations have been pretty flat, and if you look at that, that's mainly the government side. In total, our debt is not out of sync with the rest of the world. There you are. 130% of GDP, advanced economies at 271. They can handle it more because if you're richer, if you earn $1 million a month, you can borrow a heck of a lot of money because you need, say, 10,000 Rand a month to live reasonably comfortable. Am I right? So all the rest can go to debt repayments if you need to. But if you earn 1,000 Rand a month, I'm sorry, you can't make any debt. You need all that money just to survive. So the advanced economies do have a higher debt burden. Emerging market debts are higher than ours, but a lot of that last bit of the increase is China. It's not so much us, well, definitely not us, but it is China's corporate debt that lifted in the last 5 years. So I think if you look at sort of typical emerging market, you're probably looking about 155% debt to GDP. We'll be below that. There's our household debt to the emerging markets. If we can get consumer confidence back, you lower interest rates slightly, perhaps, and people find work again, then this is something that can help a boom. It can help sustain a boom, there's no doubt. But we have to get things right. Now, the business side of the economy is where I want to stay for a little while. I have to say sorry to Magnus. It's the 20th time he's seen it, and he's probably dead tired of it now, but it's very simple, okay? Turnover is vanity. You've heard that. Returns are sanity. Cash flow is reality. Well, let's look at that. Turnover in South Africa after inflation for the non-financial private sector is actually in decline. So yeah, vanity. You need vanity because you have to be vain to be a business. Your product, remember, is the best. Nobody gives a better service than you do. Okay? So if that turnover is not going anywhere, then it's a problem. The other problem is that our returns. Now, this assumes that you can sell your assets at the price that you've got it on your books. You can make a better return in the bank in South Africa than you do in your business. So, for the sake of everybody in Joburg, keep Joburg safe, close your businesses down now. All right? Get rich, leave your business. Will you do that for me? Oh, why not? Tell you why not just now. But that's the problem. We're not getting that return. When you don't have those returns, fixed investment doesn't happen. Fixed capital formation also needs that business confidence, and the private sector is, that blue line in the second graph, the major contributor to business confidence. If you want to know who believes in your future, they invest in it. Am I right? If you believe in the future, you invest in it. This is fixed investment. This is not stock exchange investment. So government and public corporations don't invest in our future. It's frightening. Especially from when you look where they were. If you take a look at what happens when you don't have the returns, well, what do businesses do? Captains of industry, boards, pension funds, whatever, they will say, go and look where the returns are. So what that means is we take more of our money outside of the country. And the people from outside the country that have their money here also take it out. So where we had a net positive fixed investment, we now have a negative net fixed investment in South Africa. So we have more South African companies investing outside our borders than we have foreign companies investing here. We are the third largest exporter of capital in the world. Yet we are not in the top 30 economies or biggest 30 economies. So our businesses have already decided they are not here. If you look at the fixed capital formation from all of these, the growth, it's all negative at the moment. This is just a different way of looking at it very quickly. The China here, just to warn people, it's not China only, it's China, Taiwan, Hong Kong, Macau, one or two other little dots. I keep thinking Singapore, but it's not. but it's like 5 little territories other than China, all so on. Because the one thing is, Taiwan's got a very big negative thing, but they're pumping into China mainland. And then China mainland pumps into Hong Kong. And, so you've got to look at that and take everything out. And if you look at the bigger block, this is what you get. But we're the only emerging market in the top 17 that invests more money outside than inside. And you would want an emerging market to invest there because the growth was higher. Oh, ours isn't. Now, the good side, the reason why you didn't close your businesses for me is because the cash flow is still positive. So if I take away inflation, again, but apart from that, I take away the effects of depreciation mainly and the buying and selling of non-core assets, then you're still getting cash flow above inflation out of 2.8%. Now, assuming that you also pay yourself from the business, why are you going to give up your business? You're rather going to say, well, I'll keep my truck a little longer, unless they burn it, obviously. That's the sort of thing that you're going to do. Or you're going to stay in the building longer. You're not going to. So it's not great for fixed investment, but the businesses carry on. The biggest constraint, and this is from the BER, very simply put, is government. Business does not have the confidence in government to invest or to make clear, good decisions. Again, coming back to the SONA. I mean, it's all nice. It's really great, don't you think? When we're talking about that new city that we're building, isn't that the one that we're doing at Waterfall? Somebody asked. I said, no, I don't think that's what they meant. And then I see on Twitter, some oaks think it's going to be in the Eastern Cape. And then I guess there's some oak that thinks it's going to be in the middle of the desert of the Karoo. I agree. Get them all there. Let's take everybody to the Karoo. People love sand, don't you think? The point of the matter that I want to make is when you're talking this sort of crap, serious, then something else is going wrong. And the problem that's going wrong and why business doesn't believe it, and government itself knows that, is that you've got all these factions in the governing party all fighting each other and no decisions come out. No sane decisions come out. That's it. And that brings down the business confidence. If you look, here's a trick for South Africa. I can talk about the pension fund assets, but I've hidden that slide today. But here's the thing. I'm starting to hide mine as well from government. I would, very soon. But here my problem is this. Corporate South Africa has not borrowed much. It's 38%. Eskom alone of that, because remember Eskom here would count as a corporate citizen, a non-financial sector role player, would be over 10%. So they'd be over a quarter of this. They're heading to 12% anyway, because they're heading to 500 billion. And then you take Transnet, Denel, those are the guys that may or may not pay salary soon or later. SABC, the Maputo door, Library 13, whatever. But the point is that about half of this is state-owned enterprises. The private sector isn't there. Then you go to another place on the Reserve Bank website, and you find your net corporate savings. And we know that the state-owned enterprises aren't savings because they ain't got money in the bank. That's 19% of GDP. So if you say 38%, half of that is state-owned enterprises lending money, then you can say the private sector is a net zero, or a net saver, or just a very low borrowings. So if you get the confidence back, these guys will come back. If the profits are there, they'll put the money in. They'll lend it. They'll do whatever they need to do. But quite frankly, they're sitting on the sidelines. I don't think this has to be zero. I don't think it has to be, say, 10%. But certainly 19% is very, very high for corporate savings. That means that they're not finding places to invest and get their money back. I just thought if I wanted to attract investment into South Africa as a president, and I've got these ambassadors, I would give those ambassadors, I would give that foreign investor that I'm looking to attract something hopeful, something other than a new city. Do you know that China has got cities that like are being built, and there are no people. I don't know, maybe we're going to take one of those. Then we've got some in Angola, they're closer. Maybe we can just take some South Africans and put them in Angola. We did it before, didn't we? But look, more serious note. I would say, I want you to come here. I was glad about the Reserve Bank. That's really, that part of the speech I'm very happy with. We're not changing, but I would say, we are going to give you certainty, Mr. Investor. We're not going to take your property. We're not going to do anything. We want you to come in here and help us create jobs. That would have been a much more simple message, not a bloody dream. So the certainty government must create, but it needs to become pro-business and fast. It needs to look at the monopolies. The rail is costing coal and iron ore. If China blows up, it's going to be harsh on that part of the economy too. Eskom needs to be split up. Harbors need to be operated by independent people. The infrastructure can belong to a neutral body or whatever that people pay for use of. Airports, for example. The airports company still makes money, but they just increase their tariffs all the whole time, and it's a monopoly. If you've got 10 biggest airports, or virtually the 4 biggest, Lanceris joint fourth, then you've got the monopoly in South Africa on the airport side. And then I think law and order. I've been working a lot with the trucks. I bought Magnus and Dalian and so on, a lot on the truck story. But I mean, in one day, about 2 Sundays ago, 17 trucks were burnt in KwaZulu-Natal or shot at. 1 in the Western Cape and 1 in Gauteng. Now, that's a crisis. Just now, this week, the beginning of the week, Monday, they blocked the road between Ermelo and Piet Retief. So the guys couldn't go, and they turned the coal trucks, they took them off and they tipped them. So the whole road was blocked for everybody. Then the minister says it's a traffic violation. You know, I think some ministers are a walking violation. These are just ideas. I don't think I want to talk about the small steps we can take. But just one small step. It's just one thing. I was recently at a transport forum, and it was an enlightening, a lot of people talking there. But the one thing that became very clear, you know, we've got the Maputo corridor. That Maputo corridor thing has been closed down. Government was financing it with the big amount of 400,000 rand a year to get their money somewhere else. Now, government, you know, creates things and they've got to look for money elsewhere. It just doesn't make sense. But for 12 years now, we have promised a one-stop border at Komatipoort, open 24 hours a day. It's going to be run by something called the Border Management Agency. 2 departments are involved, Home Affairs and SARS. And they cannot, for the life of them, sort it out, and it hasn't happened in 12 years. For the last few years, SARS has even got the staff for a 24-hour border post, and they're being paid for working half the time. This is serious. But SARS is still the thing. Home Affairs just wants to be boss. Then, on top of that, a week before this thing happened, so it's about 2 weeks ago, the South African military shot at the Mozambican police at that border post, 300 meters away, killing 2 of them for smuggling, they said. The Mozambicans were claiming that the South African army was smuggling and so on. So now we have crime syndicates in the police and the army, it seems like, because they're blaming each other. I mean, you cannot get more depressed when you hear that. And here, a guy is saying from a shipping thing, open that for 24 hours. I will pump in a lot more money. We've got a whole new citrus thing, storage at Komatipoort. We will put in this sort of money in Maputo. We're prepared to come and invest and everything into your transport, logistics, supply chain, infrastructure as a shipping line, so on. We want to really think we've got something here. No answer. you know how depressing that is when you've got 10 million people unemployed. So then the elephant in the room is Eskom. I'm not going to say anything else. Don't think it needs to be said. We all know that. Our unemployment rate, I just looked again. The Greece unemployment rate came out recently. It's now 18.1%. It's 10 percentage points lower than it was at its peak about a decade ago. They are now nearly 10 percentage points, or 950 basis points, one could say in financial language, lower than us. So even the left-wing Greek guys are getting their unemployment down. Ours is not going down. These are standard rates. It's an amazing story. Very simply, the normal forecasts, I've updated this now. After the GDP numbers came out, you can see economists have turned very negative. The Reuters forecasts are now, for the next 3 years, 0.6, 1.4, and 1.9. If you think you've got a population growth of 1.6% in South Africa, then the Reserve Bank ones are still not adjusted, but I think they will now be. They are going to come down too. So it's quite clear that next year will be the 7th year that South Africans will either be getting poorer or not richer in a row, consecutive. That is not very good for anybody. I still don't see 0.6 nearly, but let's say we can get to 0.6. That will be okay. The business cycle indicator, it's come up a bit, but it's still negative. It's now 7 consecutive months that the leading indicator is negative. That's good view 12 months into the future. There is an upturn in the gold price, which is helping. But the problem is, and Magnus has been speaking about this for a long time, we don't produce as much gold as we used to. You know, in the 1980s, I think it was 80, 81, Martin, I can't remember, but it was about 1,000-something tons. We're now at 135 tons. So we produce about 13% of the gold that we used to produce. So yeah, gold price is up. It'll save a couple of jobs, and it'll certainly lift the mood a bit, but it's not going to have the same impact as it did before. Inflation, it's not getting out of hand. The private sector is slightly higher than the Reserve Bank. I think even with the Rand collapse and so on, we should, in general, still remain under 6%. A lot of the services inflation, but the big problem with inflation isn't from the private sector. It's all these administrative prices from Eskom, the water boards, the stuff you pay for your school fees. Those are the things that you have very little control over, and that is hurting us. And property rates, spoke to a guy at SAPOA, or who's a member of SAPOA, and I know very well from Joburg, called Richard Bennett, and he has got a bee in his bonnet about the way that the property rates have been increasing. He says it's not just the percentage increase of the property rates, it's where they start kicking in and how they've changed things. And if you build a new property, you used to be getting the electricity box for free from the town. Now you have to pay for it. And now you don't have to do that. You have to pay for the connection. Then you have to pay for the next thing and the next thing. And if something goes wrong, you as a developer have to fix quite a lot of things in the first while or whatever. That was never there. So he says your property rates are actually going up. And then, so the problem is your administrative prices are a thing. And I think the demand side of the economy is not there. But the Reserve Bank is being cautious. And I can understand why. There's maybe a downgrade. But I think there's just signs now that we'll get a little bit of a rate relief. The Rand, its inverse here, is losing against its trading partners, not just the dollar, because there is part of this that is dollar strength. But, if we look at the yen, the euro, the Swiss franc, the Chinese renminbi, all those sort of things, there's 16 currencies in here, we're losing out a bit. It isn't affecting inflation too much because we've had these big drops before, so I think people have just not adjusted their prices down. They just leave them until the Rand thingy bobs. But that's where we are. But I think there is a bit of a worry when we do get the downgrade. My last slide, and then I'm finished, except for when we got panel discussion and Magnus is up then. I think if we do a few things, close SAA, privatize Denel, split up Eskom, you can do a lot of things. It's not going to cost you $1 million. But the political will to do it is just not there. But if we do some of that, we don't have to do all of it, it will help. But to talk about an economy that's going to recover next year, as we economists tend to do every year, we just put it, because we don't want to be seen as that negative, eh? You know, I could give you a more negative story if you want. No, I'm kidding. But I think it's now quite clear that we're not getting, the IMF is not putting us above 2% growth for the next 4 years. I think the only chance that we've got is around 2022 now, I think. I'm delaying it another sort of 6 months out because I don't see that change that we need. And it looks like the infighting is taking all the energy from our current government, whereas their energy should be in fixing the economy, fixing confidence, fixing the efficiency of the state, and bringing down the cost of the state. We cannot afford government. We cannot afford our government. That's my story. You can ask me questions when we get to the panel. Thank you very much.